All right, what's up, guys? Uh, so, so real quick, I am going to be making a few videos based off charting, and I did invite a couple people to join. Some of my guys that want to join the session, so I'm just gonna wait for them to show up. And I guess the goal is to just kind of help everybody get a picture on how to chart, or just do it how I do it, or maybe just a few different ways, a refresher, whatever it may be for you guys. So some of you already know how to chart, some others don't. Lots of different opinions and thought processes while all this is happening. So I'm just gonna go ahead and get started. Okay, so here's a future ES. The ES is the basically the market. Okay, and this is the only one that I like to chart whenever I'm trading, and I never chart SPY. Okay, some people are very good at charting SPY and trading just based off that without the ES, which is pretty awesome. So again, every trader has their own style, and there's lots of ways that you can learn how to chart and trade. Tons of ways, but again, it's totally up to you. You're the trader, and that's just kind of something that I've spoken about in my the last video when it had to do with strategy. For me, I'm a zone trader. I don't use any indicators besides this volume in the back, and even then, it's just some random, uh, some blue volume bars, and like that's it. They don't change color for no reason or anything like that. So that's just kind of all that I look at. So we're just gonna go ahead and get down to this charting. So the way you want to look at a chart when you first pop it up. First of all, I don't ever recommend to have like tons of lines on it because the lines can definitely confuse you. I think the lines can pretty much like mess you up when you're trading, especially if you go on the smaller time frames like the 15, 5, 3 minute, and 1 minute. It can cause a huge confusion. But again, it depends who you are, right? So let's just say you have tons of fib lines and you're charting. So for you as a trader, it may actually work for you, and you're scalping, on the 1 minute, and you're trading naked options or whatever, you're buying shares. So that style may be something that can actually work for you, and because that's you. Um, so because that's the type of trader you are, that's the type of trades that you will get. As long as it shows consistency when you're trading, whether it's small time frame or tons of fib lines or tons of trend lines, it's totally up to you. It's who you are, like I said. But for me and my style, the way that I chart is I just like to keep a few lines, and usually that's like just the demand zone, supply zone, and the time frame, which is a 4 hour for me, and getting those major alert lines, trend lines, based off the weekly chart. So here I'm looking at this weekly chart. It's the ES, and I want to see the story. I want to understand it. Understanding the story is probably the most important thing about charting. Okay, the candles tell you everything: the breakouts, the patterns, the the type of candle, the doji, the shooting star. I mean, everything about the chart, the candles tell you the story. Okay, the news is not going to tell you a story. Okay, the news is going to show the story in the candle, whatever happened. Okay, the upgrade, the downgrade, the bad news for the company, the merging of other companies, all that is going to be provided in the candle body. Okay, it's not just going to be provided intraday, but it's going to be formed in the candle body. And for that reason, we look at candles, we look at charts. Okay, we come here to chart to find levels that are buyers and levels that are sellers. That's it. We don't look at this chart for any other reason. We look at this chart to get into a trade and to get out of a trade, to get into a trade and to stop out of a trade, okay? Because the next candle is always going to be red or green, unless you are somebody that has different colored candles and you trade that way, by all means, it's totally up to you. So based off basically just what I said, I like to look at tops. So here you got 1, 2, 3, 4, 5. You got like 6 tops on this bad boy, and you don't have to mark them all. Okay, you just have to understand exactly what happened. Okay, so here you got a nice run up. Okay, here we got another run up. Here this is another run up, and you know I think a lot of people are looking for something like this with another run up. Okay, but again, all speculation, and we don't go off speculation, we don't go off hope, we just go off charts. So I want to give this first top. Okay, I just use candle bodies. The candle body is the closing and the opening of a price in a stock. Okay, next thing I want to do is I want to grab this other one. Now the reason why I'm grabbing that here is because there's a lot of price action right on top. So when we had this run up, we created a top. So the only time that came and tested was this right here, and this is where we created a little structure. So I like grabbing those areas where there's structure in a trade. Okay, structure in candle bodies and wicks. That is my goal when I look at charts. So just understanding that simple story can give you an area of supply or demand, whatever the case may be. Now here we have a little more structure.
Hey guys.
Hey, what's up?
Hey.
Thanks for joining. So here we have a little structure in the trade. Okay, so now what I'm looking at is I want to see where the next break happened and where the next run and where the top ended up being for that specific run. So grabbing this top here, you guys can kind of just see these candle bodies and have a little structure. So I want to mark that level 30-20, and you can kind of clearly see because right here I showed some resistance based off the candle wicks, and then here the same structure that we have here, okay, ended up showing support right there. Okay, ended up showing some price action here, and then ended up breaking out right here, and then here. So that's how you find those little price action areas, and that is how we look at a chart when we try to understand exactly what is happening within the candle bodies. And then the wicks sometimes are those that stop us out, and the wicks are also the levels that we watch in order to set our stop losses. So we have this breakout, right? So we created two areas of resistance. A lot of people looked at this like as a double top because we ended up having like a doji candle right on top. We ended up coming down here and ended up breaking out. So this is why I grabbed the high. And now the same thing is happening here. We ended up breaking out of these two tops right here. And we ended up breaking out to this high. Now, the difference now is the way that we're going to look at this market, okay? We want to find a structure that happened up top. So it's not always necessarily us trying to find the exact top. It's just a point of finding the structure that's within those candles. And that is how you find those areas of supply and demand. In this case, the demand is down at the bottom, and we're going to try to find the supply. So here also we have these crazy candles that happen, and I think a lot of you guys already know why that happened. That was due to the COVID. So we ended up gapping down, and for 1, 2, 3, 4 weeks, we ended up having some bloody red days in the market. So let's find the structure. Okay, so right here you can kind of see like where we started to slow down a bit and kind of just create some doji candles in between, and then we ended up finding a little top right here. Okay, so that is the one thing that I want to grab that's going to make sense for me. Okay, so I want to grab this price point right here. You guys can see I already have some alerts right there. Okay, and then I want to grab this right here. So I'm grabbing this price action, kind of the same thing that I did right here, the price action. Okay, so we had this top and then we had the price action. We had the price action. You can see I didn't get the wick for the reason that it's just structure. I'm just grabbing all the structure. Okay, so now I got this structure here. And then this is when all the price action, all these levels, you can kind of clearly see that we ended up bouncing in those specific price points. And that's where it happened. Is that making sense?
Yes.
All right, cool. So as long as the story makes sense, we're understanding the story, and then we're understanding the structure on this weekly chart. Okay, so we ended up coming down here. We ended up finding this bottom right here. The ES ended up showing this V-shaped recovery. But let's look at this right here. Okay, my goal is to look at this and see how the price action ended up working out and brought us to these new levels. So again, let's do this real quick. I want to. So this was our recent highs. I think this was the level that everybody was watching in the market, and even this one up top, this was like the all-time high that we created. So when we were doing this V-shaped recovery in the market, everybody was watching those same levels, and it's very important just to take note of some of those things that when the market is doing something like that. I mean, not just the market, but in general, any stock. When you're in like a V-shaped recovery, you want to look at those recent levels of all-time highs and the structure right before that, because the structure is the area where investors come into a stock and fight for the value of the company. So in this case, let's just say we're looking at ES. So the bulls were saying that at 32.25, they saw a lot of value in ES. Except the bears came in and they were saying, well, we don't see that much value at 33.82. Okay, so there was a lot of exchanging of shares right here that ended up showing who won this fight and who saw less value in ES. So the bears didn't see much value, so they brought it back down to where they thought ES had value at. So they brought it way down here, and that is where they ended up taking their profits. Okay, so anybody who got in here on the short rally, 1, 2, 3, 4, they ended up taking profits. They probably scaled out right here, scaled out in one of these big wicks here, and then just took full profit down here because the market started to recover. So that kind of just shows the structure, and it shows you exactly how many bears came in versus how many bulls showed up. So at every price point, at every level, the bulls ended up showing up, and you can clearly see here that this level is very significant because it brought up the wick all the way into here. So that's how many bulls came into the market, right, at that point in time. And then for the next candle is the same thing happened. They brought it way up here again. That's as far as they got. So the bulls couldn't take this stock any longer, any further up, because the bears were still there bringing this stock down. So the value of the stock was not worth 31, 33, 43. It was actually worth less. So the bears brought it down. So again, the bulls stepped away and no bull showed up, and they started to show up down here again at this 23.93, and they brought it up all the way to this 26.46. But again, that's kind of the picture as to how these things happen and how the market reacts. So again, we're letting the candles tell us what is happening, and that is exactly how you read a chart. And at every zone where there's structure, you see price action happening. So you see a mixture of investors coming in, of buyers and sellers trying to fight for that area and to find value in that specific stock. Okay, so in this case, the bulls ended up showing back up again, and at every price point, you can kind of clearly see here, right? So this level was very significant. because the bears try to show up. So this has many bears showed up. They brought it all the way down to this 29.75, as low as 29.35. And again, it's the same level. So the structure stayed within that zone, okay? And then this level still acted as a support. So whoever started getting in here got an actually good deal, and then the other ones who got in this level got a decent deal. And I'm pretty sure that they're still in, because there's no reason for an investor to actually get out, because when they buy shares, they stay in for a long time. They're not trying to stay in for like a day or two on the 5-minute time frame. They're trying to get in for the long run and build portfolios that way. So that's how you got to view it. So again, here is the breakout, right? So the structure here still has a lot of value over here. So it's all about structure. Here we see the same thing. We see some support. Here we see some support. And if you notice, no candle body ever closed below the bottom of this specific level. So which is creating, let me take this off. So now we have this structure here as a new demand zone. Okay, so now what I do whenever it's a demand zone on a bigger time frame, I like to use the yellow color, because the yellow color for me, it just makes sense. Okay, it stands out. It's something that's gonna pop up to me in my chart, and it's very magical. And for some reason, it just works. Okay.
Jeff, can I ask you something?
Yeah, yeah.
So when we say this is the new demand zone, this will be the reference point moving into the next year, right?
Yes.
Where we need to look at the levels. And anything below this, we are kind of in a crash situation, would you say?
I wouldn't say crash, because I think a lot of it's going to depend on maybe like something like this right here.
Yeah.
Okay, like this was COVID. That was a crash.
Right.
That was something that impacted the market greatly, especially in the type of season that we're in. We're in COVID season. You know, for something to happen like this again, then yes, if we were to like literally come down like this, I would agree that we would be bearish right here.
Okay.
Because we're breaking the demand zone. The demand zone is something that should be very strong, and if we don't recover from here, that is not going to be a healthy pullback. A healthy pullback is something like this right here, in this level. All right, so hold on. So the pullback is something like this, because you get this like big red candle, and you get some like structure in there. So having that little structure, it's actually a healthy pullback. And I'm sure a lot of people, you know, freaked out when we started getting some this huge red candle over the green one. So that's kind of a bearish. And it did end up going red there, but still it kind of held, and we were flat, basically range for 3 weeks until we ended up breaking out. So again, I wouldn't call it a crash. I mean, unless something happens like this again, then then that's when I would be looking for, you know, a crash and then be all bearish and stuff. But everything looks fine still. I mean, so looking at this now as a new demand zone, this would be the levels where to buy, right? So this is where my zone trading comes in. This is how I do a type 1, type 2, and type 3 entries. So whenever I find these structures, that is my area where I want to buy. So, and this is why I teach, you know, my guys through the mentorships, that whenever you enter a demand zone or supply zone, or we break the supply zone, or we break the demand zone, whatever it may be, you want to grab a contract that's at least 2 to 3 weeks out in the money, so you're able to hold through the full move, right? So in this case, let's just say we do come down and we hit that point. It's going to be a red trade, right? So it's going to be a red week, and everybody's going to be bearish, and like, you know, the world is falling apart and all this stuff, and news articles are going to come out and all kinds of stuff. The awesome part about, you know, trading in these zones is that you have your 3 types of entries. Okay, so your type 1 entry, because we're coming down, you would be looking to grab a call right there. Okay, if we keep dipping, this is your risk. You're risking this much. So 33.16 to 32.21. That's a pretty big big risk, but yet your reward is all this top. So that is the reason why I always say in the money at least 2 to 3 weeks out, because it gives you enough time for these candles to actually form and let things play out. So this would be your type 1. You would be buying a call, risking that we're gonna come break down here. Okay, and then your reward would be the bounce up, and then that's how you trail it, and you stay green. Okay, now if you didn't want to wait for that type 1, and we're still red, we're still dropping, you know, let's just say the next day it keeps going, this would be your next alert. This would be your type 2. Your type 2, because we're still in the same structure, we're still in that demand zone, and this is where you would be buying the dip versus this one. So your type 1, that's that, and this would be your type 2. A type 2, if you were to be in that type 1 still, you would be averaging in on the same contract right in here. Now, when you do that, that's when it gets a little risky when trading, because a lot of traders don't like to buy the dip. They like to wait for some type of confirmation, you know, for a sign of reversal. But all we're doing is we're trading the price action, we're trading the bounces, and that's all we're doing. And with the tight risk management, of course, depending on your time frame. So your type 2 would be right here. This is where you would buy a call, even though we have these red candles coming towards us, and then your reward will be hitting the top of this zone. So you trail it and you stay green. Okay, so there's your type 1, your type 2. Your type 3 would be the confirmation that a lot of traders look for. They like to look for, you know, some type of EMA cross. They like to look for the stochastics to start crossing, the MACD to start curving, the RSI to start curving, whatever may be, the Fibonacci retracement to keep going, the bullish candle, the doji candle at the bottom. So they look for all these confirmations, and that is what the type 3 is. The type 3, that's what that kind of is when it comes to zone trading. You want to grab that breakout, that candle that's going to give you that bullish play. So you're no longer in it at type 1 nor the type 2. You actually missed the type 2 dip buy, and you just entered on the break of the zone, the demand zone, which is actually giving you the confirmation that the demand zone held. So that would be the difference between the 1, 2, and 3. But again, that's just something that I will get into further, you know, probably in the next video. But that's kind of like your basic entry and exit when it comes to those type of plays. So going back to this demand zone, basically what I want to do is I want to find the next area, maybe the top, but it looks like, you know, this trend is still up, you know, so there's kind of still no top here, because there's really no structure yet. And the best way to find that is just to find it on the 4 hours. So the next level that I want to look at is this 3507. Yeah, 3507. So you can kind of see here. So from this run, we ended up going as high as here. And then right here, this is where we ended up breaking out. You can kind of see from this green candle, ended up going to this high, right? So you can mark that. I personally won't. I will look for something on the 4 hour, but we'll get into the 4 hour right now. But I'm sure it's the same level. So this one, I'm just gonna put whatever color, so it doesn't matter. So again, these colors are just for my chart. You guys can do whatever color you want. You guys can have rainbow colors, whatever, neon colors, you know, whatever works for you guys, because you guys are the ones opening up your charts. You know, I'm not the one opening up your chart and saying I want to get into that zone because that's my favorite color or something, you know. So just depends on you guys, but that's kind of the weekly breakdown. The awesome part about this is that I really don't need these levels on the bottom. All I need is this demand zone right here and everything that's happening in the top. So all this kind of irrelevant now for me. until we break this demand zone. Then I'll start looking at something. But other than that, like it's just cool to understand how the price action is working, especially on these larger time frames, because the larger time frames give you a bigger picture of what the supply and demand zone is. So like I said, there's really no supply zone yet because there's no structure. So until we find a structure like this, then we don't have any type of supply zone. So we're gonna go on the 4 hour and kind of just see the level. So look, even the trend line is just chilling there. So I'm gonna delete that. I'm gonna try to get closer. And this market's just been rocking. There's been like tons of news. There's been tons of hype here and there with certain things, and news articles coming out with the COVID and then the vaccine news. We just recently got some financial news, which is awesome. So the IWM, which is the Russell, is the small cap stock. So they're doing very good. So they're kind of reason why the market's holding. Now XLF, which is the financial sector, is actually going to be getting some good news. So this week, this coming week, maybe into next month, it's probably going to show a lot of strength, and it's been recently showing tons of strength. So, and then same with the airline sector. Airline sector had a lot of strength in just a few months ago, but currently just pulling back. So there's tons of things in the market that's holding the market up. I think a lot of people are just looking at this in the wrong perspective, and they're trying to catch the top, to be bearish. They want to find a reason, to be bearish in the market. But, I'm not here to be biased, and I'm not here to, play the news articles that already happened. I'm here to play these charts and find these levels that make sense. So just a little quick insight though, whenever new stuff like that comes out, remember that the COVID season already happened, and it happened right here. The full reaction to COVID, the thought process behind COVID, all happened within 1, 2, 3, 4 candles, and all the pullbacks, it's all price action. Some of these had to do with some news articles that popped off, during that V-shaped recovery, but nonetheless, the reaction to COVID is no longer the same as it was here. So now if we do, like you asked, if we do get some type of crash, it would have to be, something that's going to impact the economy in a very bad way, that's going to give investors a biased outlook, and which is going to bring in the bears. So, just something to keep in mind. Okay, so all right, so looking at this 4 hour time frame. So I'm just going to look at some of this here. All right, so I'm going to grab this top. I'm going to grab these candle bodies here. Okay, because I like grabbing candle bodies. The wick would be your stop loss. You can definitely grab the wick, totally up to you. Like I said, there's tons of ways to chart, and we'll definitely get into some more different types of way of charting in the next few sessions. But nonetheless, I use candle bodies, okay, and wicks are my stop loss. So, so here we kind of do have this trend going on here. We kind of have a trend. Okay, so they always say the trend is your friend, and you can kind of clearly see from these ranges. Okay, so we have a little base here. We have a little base right there. We have this little base right here. So there's a lot of price action, happening within inside just these price points alone. So between 35.14 and then the top of this, which is your 36.53, a lot of price action happened there. So usually when I see things like this, they're usually slower days in the market, and days like this, people like to call this chop, but I look at this like it's gold, because when I trade these ranges and I find these ranges, the breakout is what we get into. The breakout is what brings in the volume. The breakout is what causes the market to have another run. And this is where a lot of traders miss out, because they see this and they stay out, and they miss out on so much that they forget, to set those alerts at the break of the range. And the break of the range is what's going to bring in, those profits. And without those profits, how are you going to be a consistent trader? You know, the more you stay out because you want to call this market chop, then you're really not making any money. And you're really not preparing yourself to, you know, capture one of these trades based off our charting. And that's it. You look for these bases, you set those alerts, and you wait for the breakout and just let it go. And that is why we trade, you know, 2 to 3 weeks out in those contracts, because they're a lot safer versus the weeklies. You can definitely trade weeklies, of course. I'm not taking anything away from that. You can definitely trade spreads. You can, you know, tons of ways you can trade by shares. So no need to just trade, you know, naked options. And we get all this from, you know, from charting. That is why we chart. We chart because we want to trade the next day for a day trade, or maybe get into some type of swing trade. So in this case, you know, a swing trade would make sense if we have this, even right here. Had we not had, you know, any of this here, we would have still been able, you know, to swing trade based off this trend line. And your swing trade, you know, you could have grabbed, you know, maybe like 2 months out and say, hey, I'm going to grab an in the money spy call and I'm just going to hold it because the trend is still your friend. So you could have had a nice small trend here, and then you still wouldn't stop out. You still be green. You would still be green here, and you would still be green up here. So again, that's kind of one of the reasons why sometimes it's okay to just go for a longer position if the trend is your friend still. Until that changes, then you stay in. All right, so for this top over here, so we want to find an area where the price action started bouncing at. So I can clearly see it. So I hope you guys can too. Right here. So all this little price action right here. And we're just going to point it out. Okay, remember, this is not a zone. So everything is not about having a zone. When I look for these zones, it's all about just finding the structure, the area where you're going to be buying the bounces and selling at the tops. And let me just point this out real quick. So the price action, here's your wicks, here's your resistance, and the breakout at the same time. Okay, because we ended up building this little trend right here. So you kind of had like a ascending triangle up inside.
Mm-hmm.
All right, so kind of that makes sense. And we ended up hitting the high of 3704. So I want to make sure I mark that 3704, and then you can kind of see this price action up here, right? So now I'm using these wicks that combine and bring together all these candle bodies and the price action on top. So now you have a small supply zone right there. Okay, that's your supply zone. It's not a demand zone yet. The demand zones are still on the bottom, which is all this price action down here. Okay.
Oh boy.
So here, you can kind of clearly see the trend ended up coming down, and we ended up bouncing right there. Same thing here. All this price action, these wicks right below. Same thing. We ended up finding resistance. So it was a drop, base drop. Ended up dropping some more. We ended up gapping up, and the same price levels. We ended up having some price action. So again, here was your breakout. And then today, it ended up confirming that same level right there as support. So now what we're going to look for is for this supply zone to be a breakout in the next few weeks, and look for whole numbers, right? So right now we're at 37.23, the high, the all-time high. We're going to be looking for 37.30, 37.40, but the next actual whole number would be the 37.50. So that's going to be the next level that we actually look for. Up top right here. So you want to look for whole numbers on ES.
So
yeah.
So let's say this is an uptrend, right? From this 36, 40, 35 to that upside of 37. So we rallied, we based out, and then we're going to rally up.
Yeah.
But then this drop that happened today,
Yeah.
can we still include this in rally-based rally upside, given that it was triple pitching and whatnot, and call it as exception? Or do we form the base out now first with side movements before we go up?
Well, this what happened today.
Right.
So we had a rally base
Yes.
and then the drop.
Yes.
So this red candle gives you the drop. So the break of the that zone right there. So that base basically is what you're asking, right?
Right. So if
Right there.
if we ignore this red and green candle that happened today, right? We were
Yeah.
still in that rally-based rally motion towards upside.
Yes. Yes, we're still in there.
Okay.
Yeah, so we're still inside. So again, like that's why like I always say that, there's tons of ways to trade. And
Hmm.
had we had the alert at 3704, we would have shorted right here. So this was your rally base drop.
Got it.
So you could have played puts here and made money. Now,
Yes.
that's the thing, that even if you grab 2 weeks out on your contract, right, the important thing is to make sure you trail it. So had you got in at like 3704 or even 3700, you would have trailed your position all the way down here, and you would have probably stopped out at this 3690 because you got in at the 3700. So you just gave yourself a stop loss here. You would have stopped out in the green. So that is the difference when we trade these option contracts, is you got to move your stop up. The more you don't move it, the more you're going to probably be holding this put and be like, oh, well, we ended up breaking trend, right? And the next thing you know, we're over 3,700. And you're like, oh no, I'm just gonna give it a few more minutes, see if it continues down, right? And then next thing you know, you're in the red again, and you're at 3704 again. You're back in that base, and you're like, oh well, let me just see if it rejects here. Let's see what this candle does, right? And then you're looking at this like 5-minute candle or 1-minute candle. You're like, let me just wait if it closes. And then it closes, right? And it closes up top, and you're like, oh well, let me just give it a few more minutes. And next thing you know, you're telling yourself and you're convincing yourself that this market is still bearish based off one candle, when all you had to do was trail it and take profit right there at your stop loss. So that is why like a lot of traders get mixed up, because they don't trail their positions and they go based off something that they think it's a biased outlook. In this case, meaning we ended up breaking the range, coming down, and it's put season, and that's what traders call it. Especially for those new traders, that's what they would call these things. They say we're in put season, and that's all you hear. And then next thing you know, people are getting FOMO and they're buying puts and they're getting stopped out. And all we did was come down and test this as support, which probably they did not have it charted, which we just charted. So it shows major support plus the volume. And this volume is something that I always talk about, that whenever there's high volume, the high volume is not always bearish. It's a mixture of people getting in at the bottom and sellers and people taking profit at the top. So bringing the stock down, giving you a nice area to buy the dip at, and confirming its support. So this actually validated today. And now we're closing in this rally up here in this supply zone. And we're literally just closing right on top and showing a lot of strength, closing towards the end of the year. And next week is our last week.
Mm-hmm.
Yeah.
So if I were to ask you, what is your opinion for the next 2 weeks going into the next year?
Yeah. So my opinion, just based off this chart, how
Mm-hmm.
I would play it. Let's just say I'm in calls.
Right.
Kind of like I explained earlier with the type 1, type 2, and type 3.
Mm-hmm.
Okay, in this case, because we're going up, here's your type 1, here's your type 2, here's your type 3. Your type 2 is where you should have your tight stop loss.
Got it.
Okay, because you don't want it to go below this
that.
3704. If you want to get a little tighter, 3705, 3706. Okay, you just want to grab some of those whole numbers and make sure it doesn't drop down below this supply zone, because you can automatically see that the structure here, the candle bodies, the price action is inside this level. And this is why, like, I don't use these wicks up here, because there's no structure up top. The structure is down here. So I don't want it to break the structure. So once it breaks the structure, that's when you get out, and that's when you grab your puts. So I think a lot of people made a lot of money playing puts today. But yet the bulls just kind of laughed at the bears, and we're saying, nah, we're staying green in the market. It's worth staying in. So I'm going to go long and hold for the next few weeks. And that's just kind of exactly what happened. So this would be your type 1, right? So let's just say we open up Monday and we're still inside here. Okay, this would be your type 2 entry if you buy a call right here, and your stop loss right there. So it's a tight move, it's a tight stop loss, and it's all about risk management, and that's kind of based off the charting that we just did. And then let's just say we start going up again. Your type 3 would be right here, which you're grabbing the breakout. And this is where we're going to start trending up again, and maybe build another structure. If we do build another structure, we'll actually create another zone. So this would become a demand zone. But until that happens, we're going to keep this as a supply zone and just leave it at that. So hopefully that charting kind of made sense for you guys.
Yep.
Does anybody else have any questions based off this charting? And all I did was use the weekly and the 4-hour time frame. The 4-hour time frame, just finding this trend up here, basically, is what I did.
Next question. When getting into the calls, for example, right, or taking the puts or scalping, when we do the scalping short in and out, does 15 minutes of ES also works? Should we be referring to the 15 minutes of this as well?
Yeah, definitely.
Okay.
You can even use the 5-minute, because it's the smaller time frames that's going to give you your entry. Unless you're entering on the 4-hour time frame and that's all you're doing, then you would wait for the major alerts to hit. So in this case, 37.15, right? You would get in on the 4-hour time frame, and then you would set your alert at 37.04, and that's would be your stop loss based off the 4-hour time frame.
Got it.
But again, those smaller time frames, that's what's going to give you those levels, and you can see it here how it all played out just based off what I charted.
Yep.
So yeah, so anybody could have played puts here, made tons of money. We ended up playing calls right here on the run up. Ended up taking profit real fast, and then it ended up coming down, and the last few minutes of the market today was just insane. So that just shows you that there's still bulls in the house. So yeah, that's kind of all I got for you guys today, unless somebody else has a question, which I highly doubt. But yeah, my goal is to just do a few of these sessions, so we can do, have a little conversation about what the story is within these candles. And I'm probably just going to show a different ticker on how to chart it, maybe the difference between, some of these trend lines and zones, and some of the pre-market levels. I think the pre-market levels I'll leave up to Bueller, because that dude's a genius. And he's very great at explaining those, and I think he has tons of videos based off that. So look forward to making a few more videos with you guys, and I love to keep it open for you guys to keep asking questions during the session, which makes it a lot better. The interactions are 100% way better. So
Absolutely.
So yeah, so we'll leave it here, and thank you guys for joining. I appreciate you guys. And then I hope this kind of helps you guys see a better picture.
Yep.
And
absolutely.
Yeah, we'll get to some more charting in the next few days. We'll have another one on Sunday, and I'll definitely send out the link to some of those who want to join. And we'll do some more charting and get ready for the week. And then as the week goes by, we'll just keep charting and just kind of review some of those charts that we charted and see how they played out.
Sounds good.
Cool. So again, thank you guys. You guys have a good night. Enjoy the rest of your weekend. And then I'll see you guys on Sunday for Market Open.
Sounds
All right,
good. Thank you,
thanks,
Chef.
All right, guys.
Have a good one.
All right.
Bye, guys.